Welcome to Analyzing Finance with Nick, and this is the second part of a two-part series that I'm going to be talking about student loans and the economic incentives that have driven up the cost of college education. And with the first part, we covered a lot of the policy changes, particularly in the late 1970s, involving expanding access to student loans and they're preventing them from being discharged in bankruptcy, that created the student loan bubble that we're going through today and the expensive cost of college education. And so in this part, I'm going to go into how can we solve that. I mean, it could be solved by people just stop going to college, which due to demographic factors and the high cost of education is making the prospect of going to college a lot less appealing for a lot of Americans, particularly young men in this country. But I still think there is value to a university degree, and I don't think the solution is just everybody opting out of college. There's better ways that we can fix this. And I think it really have to go is you need to clean out the moral hazards that are driving up the cost of college in the first place. The first one of these is the bankruptcy laws. If the students can't withdraw their student loans from bankruptcy, if they just go to a school that doesn't educate them correctly to get a job that makes sense to pay off the loan, then you've got a generation of underclass wage slaves who are stuck and can't get out of the hole of compounding interest rate, because student loan interest rates are much higher than interest rates on mortgages or basically any non-credit card level type of debt. And so it could become a debt trap real quick. I don't think it should be removed on existing loans, just because that would create a lot of mass defaults, I think, real quick. But you would have for any new loans that are issued for student loans, you would basically do is say, look, students are allowed to declare bankruptcy like any other type of credit, like a mortgage or credit card debt or something like that. That's step one. Step two is you need to get rid of the government guarantee for student loans. It's the fact that the banks are guaranteed, at least partially, by the government, incentivizes them to loan to borrowers that otherwise have a very low probability of paying back, and also lend them an amount of money that is way too high given the potential earnings power of that student out of university. This would solve two problems at the same time. One, it would drive down the cost of college, because that demand from all that excess borrowing will be gone, and there'd be the same amount of universities being able to supply classes. So as a result, in order to compete for students they'll have to, or get more students, they would have to lower prices at a level that is affordable for the students to pay under the new student lending laws. The second thing this would solve is it would make students more judicious about what they study in their undergrad and graduate studies. If you're studying a humanities major which doesn't have a easily quantifiable career path, then a bank was probably going to be more hesitant to lend money to you than if you studied something such as finance or engineering or something more applied. And as a result, those students will not get credit, and therefore you will have less people graduating with uneconomic fields of study and majors who are stuck in a debt trap. So basically, student loans, at least they either will be restricted outright, or they'll have less money lending available to people who pursue non-economic majors. Some people critique me is that should humanities only be studied by the rich whose parents can pay for it? I mean, I think people can study humanities on their own, especially in the age of the internet, and still be a well-educated person. You could take a lot of those classes in your general ed courses or electives. But yeah, I mean, that's part of the way the moving up the ladder socially in the history of America, is that the immigrant family can't go to college, the first generation's kids do more applied majors and they do well so their kids can study humanities. That's kind of the classic progression of education class moving up the curve, and I don't see anything wrong with that. It's not the government's or society's job to subsidize people who are studying something that is non-economic and expect us to all pay for it. If they want to do that, they should be able to pay for it with their own funds. And then the universities will adjust by changing their offerings to offer things that are more economically viable. And then another critique of this is that, oh, why would the banks lend at all? These students are 18 to 22 years old with very little, if any, job history, and they're not really mature enough to pay back. They may just file for bankruptcy on a whim. I mean, given how easy credit is, with how low interest rates are and how loose financial conditions are, there are plenty of lenders who are sophisticated enough to figure out what's the right price to lend at these people and how much to lend. I mean, they're already doing this kind of with restructuring student loans with companies such as SoFi. So I don't see how a company such as SoFi can't figure out how to do this with non-government guaranteed student loans on the outset. I think they can. And then the last step for this is to make universities partially accountable for the outcomes of their students. I don't say that they should be a guarantor on the loans. I think that's a little bit too far. But you can base their accreditation status on graduation rates and default rates of your student loans. Like, there's a big controversy with for-profit colleges that they had low graduation rates and extremely high default rates, which led, under the Obama administration, the Department of Education to kind of crack down on these people because they were degree mills where they're taking advantage of lower income people who felt like they couldn't go to a regular school due to time or costs, and so they go to these for-profit schools and it doesn't work out the way they'd like to. And that degree mills are a real risk. So the way that the university would take on risk is that their accreditation status or their ability to get research funding from the federal government would be dependent on their default rates and their graduation rates. So if you're a school that has a low graduation rate and a high default rate, which basically means that you're not properly educating your students if the graduation rate is too low. And I'm not an education expert, so I don't know what the right numbers for that should be. So I'm gonna take this with a grain of salt. But then they're not educating their students properly. And if the default rate is too high, it means that you're not teaching the things, even if your graduation rate is high, it means you're not teaching stuff that the job market or the broader society values enough that these students can pay off their debts. And I think a school should be measured on that somewhat. Like, if your school isn't teaching anything that is any actual value, or your degree perception is not high enough to guarantee decent employment, then the university is not doing its purpose and not educating its students properly, and therefore should be regulated for a punishment for that by regulators. I think that also on the internet, these should be ratings that are disclosed for these type of statistics. It should just be more transparent. Like, if you study a certain major at a certain school, what is the actual honest income path for these students? And you don't have to, for the right of privacy, you may not have to disclose the average salary, because I don't know how many graduates want to share that. But anybody who takes loans, that's public record. You could see the default rates on those loans by major and by what university they attend, and that would help parents and students make more informed decisions on where to go to college. And the other critique that I'm going to get for this is, what if where you're going to basically, by restricting student loans and making it harder for universities, are you going to see either mass failures of universities, or universities only want to recruit rich students no matter what their academic qualifications are, because of the inability to borrow to the hilt to go to school? First of all, there's not enough rich kids in the world, especially in the United States, if we have stricter immigration on education, to cover all of the university seats. There may be some schools that specialize in being just the finishing school and the luxury party of the rich, but we already have a lot of those. There's certain private schools in the country that have a reputation of just being 4 years of networking. That's not going to change. But not every university can do that. And you started to see this like in 2016, 2017, where some private schools started to cut prices because they realized they've hit the limit on student loans. The peak class in terms of this demographically, the size of it was the class of 2013 in the United States. And the most notable university to cut tuition in response to lower private school demand due to people being less willing to borrow was Seton Hall University. I'll send a link into in the description of they cut their tuition by about a third in response to lower demand, and I think that's what you're going to see. You may not have your university buildings remodeled every 4 years, or have it as much of a luxury experience even at public schools as it is now. But I still think you'll have education, and then there's also the online component too. Like they could have an online only school that charges a little less, or quite a bit less, but offers most of the hard educational content. However, I do think there is value with meeting people from different walks of life and experiencing a variety of different activities and student organizations and clubs and other sorts of avenues of enrichment to figure out what you want to do in life. I think that's actually probably more valuable, or just as valuable of a 4-year degree as what you actually study, is because most people when they graduate from high school have really no idea what they want to do with their career. Overall, that's my thoughts on how to solve it. It's a mix of kind of what would be considered left-wing regulatory solutions and more capitalist deregulation. I think you need to get rid of the moral hazards for the banking system to make them more honest about who they lend to, but at the same time you got to make the universities more accountable to offer a product that can justify the cost of their tuition. Thank you for watching, and if you like this type of content, feel free to like this video, subscribe. Every new subscriber helps us grow and provide nuanced information about finance and the economy to the YouTube community and the internet as a whole. Nothing in this is investment advice. Please do your own research and due diligence before making any sort of financial decision. Also, if you have any questions or feedback, either comment in the video or email us at askafundmanager@gmail.com. Thanks for watching. Good luck out there in the markets.